In this episode, we're discussing 4 signs that you're built to invest in stocks. Hey everybody, I'm Mike Desepoli, and this is episode 32 of the Ask the Advisor show. Today we're talking about 4 signs that you're built for investing success when investing in individual stocks. Now, there's a lot of different ways that you can invest in the markets, individual stocks, mutual funds, ETFs, bonds, on and on and on. Today we're just looking at individual stocks, which allow us to have equity ownership of publicly traded companies. There's a lot of different stocks out there, some good, some bad, some indifferent, some nobody's ever heard of, okay? So how do you identify what stocks are good for you, and how do you have long-term investing success? Well, here's 4 signs that you may be built for success investing in stocks. So the first one is you understand business and trends within the economy. One of the biggest keys to successfully investing in stocks is being able to spot a business that has the economy or a trend in their grips, okay? A big example of this would be Apple, right? Apple and the whole Apple ecosystem has many, many consumers inside of it. I think the numbers are like 7 or 8 out of 10 people have an iPhone or at least own some sort of Apple product. That is mass acceptance of a product, and that is a trend that you want to look for when you're investing in individual companies. If you understand business and you understand how business works, it might help you spot a trend within the economy before it grows immensely, so you can invest in that in the forefront and participate with that company as it grows. Understanding business will help you also spot companies that may be poor investing opportunities, where you look at a product or a service, you ask yourself, is this something I use for myself? No. Is this something I see around in 5, 10, or 15 years? The answer is no. That's a company that you're going to want to stay away from. So the first sign that you're going to succeed with stocks is that you understand business and trends within the economy. The second sign that you're going to succeed investing in stocks is you're confident in your decision making. Okay, don't get me wrong, confidence is not all we need to succeed in the stock market, but being confident in the decisions that you make and having the ability to stay the course is very important when succeeding in individual stocks. Now, if we know anything about stocks, we know they have high levels of volatility, which means they move up and down in very sharp movements. That should not deter investors just because these stocks move around a lot. You have to remember why you bought that stock, what is the trend that you're looking to invest in, and keep an eye on that as things develop. Having the confidence in the decisions that you make will help you stay the course and not focus on all the noise that comes from the media and all the financial experts out there that are telling you why you should or should not own certain companies. Remember, guys, through the media, fear is what sells. Good news doesn't really sell newspapers or magazines. So a lot of the times they're talking about stories about the next crash or why you shouldn't own this stock because it's going to go to zero. Try to tune out all the extra noise and focus on the decisions that you made and stick to them. Third sign that you're going to succeed investing in stocks is you have respect for money. Okay, this is a big one. There's many investors out there that have zero respect for money. They just throw their money to the wind like they're gambling in the casino. They pick stocks that they really don't know much about, which, as a side note, guys, don't ever invest in a company you don't understand. That is one of the biggest mistakes we see people make. They read about something in a newspaper or their neighbor told them about the latest hot stock. They invest their money into it. They don't even know what the company does. They don't even know what the core business is. So make sure you understand your companies. But back to having respect for money. If you have respect for money, that you'll make better decisions strategically with your money. You won't take, high chance gambles on certain companies that you don't understand. Don't invest in low price penny stocks. That's nonsense. That's a fool's errand. That's a quick way to lose money as well. You have to make sure you have respect for money. This way, when you put your money into a company, you're looking at the ins and the outs, the ups and downs, and all the different aspects of that company so you understand the type of risk that you're putting your money at. So respect for money is huge, guys. And the fourth sign that you could succeed in the stock market is you have patience. Guys, you need to have patience when you invest in stocks. I can't tell you how many times that I've bought an investment, I bought a stock that ended up working out for me long term, but maybe the first couple days or first couple weeks even, the stock was moving against me. It was going down, I was losing money. You start to second guess your decision making. Why did I buy this stock? I'm losing money. Should I sell it and just move on? You got to have patience. Have patience and remember why you bought that company, which takes you back to number one. If you understand the business, if you understand the trends in the economy, it'll allow you to be more patient. Remind yourself, listen, I didn't buy this stock to make money over the next 5 days or 2 weeks or 1 month. I bought this because I spotted a long-term trend in the economy that I want to participate in. So having patience will lead to additional success. For people that are impatient, they try to time the market, they try to get in, get out, and pick the perfect time to buy or sell. It is very difficult to do. Anybody that tells you that they know how to time the market is a fool. All right, it's just something that cannot be done. It's been proven over time. You got to have a strategy, you got to have patience, and you got to have a disciplined approach and stick to it. So this is just 4 signs that you may be built to invest and succeed with individual stocks. There's obviously many other signs and many other tips out there that we'd like to give you. If you want more information on investing in stocks, you could visit us at www.asktheadvisor.com. And if you're on YouTube watching this video, we really hope you subscribe to our channel. Click on that button in the bottom right-hand corner of the screen. Stay up to date with our latest videos. Every time we put up a new update, which we do 1 show a week, you'll get an email to your inbox so you make sure that you'll never miss it. If you're watching this video on Facebook, we thank you for watching. Give us a like, give us a share, throw us a comment, let us know what you think, give us some feedback or anything that you want to hear us talk about in the future. We really lean on you guys for your feedback, and we really appreciate anything that you can throw our way. If you're on Instagram, please follow us at Ask the Advisor. There's a lot of great stuff going on there. We really hope that you stay in touch with us, follow along, look at some of the different things that we post. We're just out there trying to motivate entrepreneurs. We're trying to give you wealth, wisdom, and financial fitness tips, and we do so through that platform in a very different way than we do through YouTube and Facebook. And last but not least, if you're on Twitter, you can tweet any question that you want in the finance community to us using the hashtag AskTheAdvisor. That's really where this show was born, on Twitter. Obviously, it's grown to different platforms now, and we thank you for your support and allowing us to grow the way that we have. But anything that you want to talk about, tweet us, hashtag AskTheAdvisor. We'll be sure to get to it in a future video. Thank you guys so much for watching. Thanks for all your support. We'll see you back next week for episode 33.